Hey there everyone, it's Monday, August the 31st, last day in August 2009, about 4 p.m. Central Daylight Time. Wanted to kind of go over the market action of today. I thought this was kind of interesting today. I don't know if this is a trend or not, but as you all know, the Dow is down a little bit today. Certainly not a crash, but down about 48 points or so. This was in response to what's happening over in Asian markets. The Chinese markets were down about 7% today, so quite a little haircut going on there. But I really think because it's been so hot there lately, it's just kind of a one of those consolidation moves, if you will. One of the things I think that's very interesting about today's market action is we had the Dow go down today. Markets have been selling off a bit today. But another thing that was kind of interesting was the dollar. As you all know, I've been kind of mentioning the last several weeks, we've been trading in this 78 on the US dollar index, trading between 78 and 80. And today we dropped from 78.5 down to around 78.10, which I think is quite interesting because the dollar also, because the dollar went down today, admittedly, which is about 0.4, 4/10 of a point there. At the same time, the oil went down too, just below $70 a barrel. So what's interesting here, folks, is we have the markets going down. We've got U.S. dollar going down, and we also have oil going down. The gold definitely enjoyed a little rally today, up a few bucks an ounce. But I think one thing that's kind of disconcerting is the fact that the dollar and oil both have gone down. Usually it's an inverse relationship. Usually dollar goes down, oil goes up. Vice versa. Obviously, it's not always an inverse relationship all the time. I just don't know if this is the beginning of a downtrend for the dollar starting to go down, and also the equity markets going down as well. Certainly, I think we should watch this. I don't know if this is a new trend, but it definitely is disconcerting. If we can maintain below 78, seems like 77.8 has a strong level of support. So if we can go below 77 and stay there for an extended period of time, I would say the next levels to look at would be at 71 on U.S. dollar indexes. Initially I thought they may actually take this thing to about 10,000 on the Dow, but maybe we kind of run out of energy for that. Really expected the index, the U.S. dollar index, to continue to drop a bit as the Dow went up. And then we have an inverse relationship as the Dow, started to climb a little bit because of inflation, and the Dow starts to increase because of inflation. We would have the dollar index decreasing because obviously you need more dollars nominally to buy things. So you may have a Dow at 20,000, but on nominal terms, which is great, but in real terms, it may only be worth what Dow is today at 5,000. So. Again, I think we should take a look at this. I think this is quite interesting. Usually the dollar goes down and the Dow goes up, so it's interesting that they're both down today. Another thing I want to bring up to your guys' attention too was I have a friend of mine who's a bond trader. Basically, all he told me was that the Federal Reserve's secondary credit discount window is at its highest borrowings ever. So that's hint number one, as he says. The hint number two is the yields on the 90-day Treasury bond are getting dangerously low. So this means like the big investors would rather just kind of park their money and just sit it in some account and earn nothing on it than invest in stocks and bonds, is what he's saying. So another thing that he brought up to my attention was, and if I could see here in this email, was the fact that the borrowing, the secondary borrowing in August was $670 million. Now that's in August. It was $66 million in July. It's gone up by 10 times, roughly. So we have the secondary credit markets expanding, and as you know, if you throw in the Federal Reserve fractional reserve banking that we're all kind of stuck with, the Federal Reserve just created about almost I think the reserves are down to about 100 to 1, if I'm not mistaken. I may have to check that again. But you're looking at almost $6 trillion, just out of nowhere. Anyway, ladies and gentlemen, again, I think we should watch this trend. Take a look, keep an eye on the U.S. dollar index and also in the Dow. If you start seeing both decrease in the next couple of weeks, I think that will be our indication that there's a new trend of a dollar decrease and also an equity increase, or equity decrease. Sorry. So anyway, I'll bring up to speed more as the week goes on. Ladies and gentlemen, please subscribe to my videos if you like what you're hearing. I'm going to try to be more timely with these. I know I've been out for the past week or so, been kind of busy, but please subscribe to the videos. Make comments, rate as much as you possibly can. Tell everybody about this. I'm trying to become a partner so I can funnel the money back into promoting my videos, because right now I'm using my own money to promote my videos. As you might have seen, there's a click on when you go to YouTube, it says promote videos, you'll see my videos there. I'm paying for that, so I'm just trying to, if you guys could help me out with that, I'm just 100% fund the money back, just keep these videos going and keep the information going, and make your own videos too. Become friends with me, and let's make some videos together, and let's get this word out. And again, I'm going to say this one more time, HR 1207, get your representatives to pass this thing. We got to audit the Federal Reserve. It may scare the hell out of all of us, but we've got to get this done. Anyway, try to keep this as short as possible. Ladies and gentlemen, thanks again for watching, and we'll be talking to you soon, okay? Bye-bye now.